from April 1st till now was essentially, literally right now is like 100 and maybe 14 days, trading days. But right around 100 days, I think it took 102 for me to double my account. 100 trading days is the difference between you now and you at your goal line. If you continue to stay in early game, especially as your account gets above 150 and onwards up to 200,000, making $500 a day and making $2,000 a day is incredibly realistic.
You might want to repeat that.
Okay, fellas, and what's the feminine version of fellas? Is it
Fellas?
Fairy tale things.
Fellets? Yeah.
Let's.
Ladies and gentlemen, there we go. Dave and I had chatted, and I had suggested maybe I come in for a boot camp, which is the Tuesday, Wednesday, Thursday early morning. And others had done it, Duke and Ed and Diane and obviously William this past week and a couple others. I'm probably missing some others. Everybody but Kovashi. So at that point, part of the reason why I wanted to go into the boot camp was in August, I had qualified for the Apiary Fund hedge fund account. And so I'm trading with the hedge fund, but they don't trade gold. So that pushed me back into the Apiary days with Alveo, where you have a $5,000 account and you have 1.0 lots for bullets. And so a $5,000 account with a margin of one lot and a max risk out of -5%, those are the parameters that a lot of us started our trading career. And so going into the EU and trading that, I really started to struggle with position size and probably, in hindsight, position size, and then also early, mid, and late game for that position size. So that was kind of our focus when we started in the boot camp. And super glad that Dave and I had that conversation and we jumped into that boot camp. I wasn't really sure what to expect or what we were going to end up talking about. But what happened was we had really solidified 3 takeaways for that week. So I wanted to share them here. The first one that I was going to talk about is adding to a trade at the correct spot. And what I had done is I went back and pulled up and re-listened to the 3 sessions we had. This is the first morning, and if you go back to this, the date is 8/27. At the 32-minute mark, we're talking about a completely different subject. We're talking about the higher time frames. And we started the room, I put a couple trades on, and I'm about to put a trade on right here. And at the 32-minute mark, we continue to talk all the way up to, I think, probably the 37-minute mark. So about 5 minutes goes by. And Dave started a conversation that was really, really important.
So the only reason why I'm asking about the 4 hour,
okay,
and particularly the 4 hour.
So right there, I added a trade, and we were in a little bit of an outside range going down. And so for a ride the wave, I waited for a pullback and I added this trade. And as you can kind of overhear, you mentioned that the sound is low, but we were continuing to talk about the higher time frame, and he was asking me some questions on why and how. But I would really suggest you guys go back to the 8/27. You could go to this 32-minute mark and listen all the way to 41.28. And what's going to happen is price is going to pull back here. And Dave starts to explain, he stops the conversation. He says, hey, I want to explain something here that's really important. And the funny thing is, immediately after he gives me this gold nugget of knowledge, I hear him, but I don't listen. So I ask him about the break-even line. So I say, okay, cool. What about the break-even line? And I completely blow through. And Dave, in all of his wisdom, pulls it back and he reiterates the importance of adding to a trade at the correct spot. So what I'm going to do is go to the 37-minute mark because I want us to kind of hear that conversation.
Should go, and it doesn't go there. what do you do, right? So to where that I was just going to just reiterate what you're saying. So in doing so, you're looking to where the market should go, and then when you figure out where the market should go, and it doesn't go there, what do you do, right?
So I just added another trade on the further pullback. Yeah, and with the fib, whether it's on the 1 or the 15 or something, that has really given me perspective on saving the bullets and understanding where it could go, and and not freaking out, or not slapping on bullets for no reason. So if logically, if we're sitting here and this is the 23 fib, understanding that especially in gold, what we've seen, understanding that it's more often than not it pulls back to the
skip ahead a little bit.
very, very comfortably and pulls back.
Yeah, let me just pause.
Here it is.
This right here is a really, really minuscule thing. It's really small, but it's
That's how Dave
important
smells
when you're
minuscule.
stacking, and it can become big if you let it. But it's putting a trade on here, right? It's this guy. This guy right here, totally great. So what happens is, and I don't think you're doing this, but what happens, I don't think you're doing it for this reason, but by doing it, you're invoking a consequence, right? An unintended consequence. By putting a trade on here, most people do this because of FOMO, because they're like, oh, it's going to break down, I want to be in. I don't think you're doing it because of that, because you waited, right? You didn't get in here, you got in over here. You waited, you saw this blue, and you're like, oh, it's going to break now. But here's the thing, is that if you put a trade on at the end, right, and it runs in your favor, great. You did no harm, no foul type situation, right? But if it runs against you, like it's doing right here, this becomes bad PTP. Would you agree with that?
Yep.
But because it goes against you, this is like really bad PTP, but where you had it wasn't. And so that's why it's very important to understand this, is like, if it comes up here, this is the place, this is the 50 of this move. So I put one trade here. If it comes up here and stalls, I'd put two trades here, but never, ever put a trade there, because what that does is that immediately says, well, in order to move my break even, now I got to put two trades here, and I got to put three trades here, and that gets you in heavier, faster, right? And so I just assume, say, if the market doesn't reach up to here, then my next place to add is not here, but it's after the break and the pullback to the 50 is here, right? Not here, but here. And it's such a slight such a slight difference, but it means the world when you're trading early, mid, and late game bullets, because this is now bad PTP. And your exit for this is coming back to the 50 of this. And now you're going to have to exit with this guy and this guy, versus just exiting. Your break even would be here, right? And this happens all the time, but very few traders pick up on it because they get rewarded for this, right? Because like I said, you would never have thought about it if it would have moved in your favor. Right? If it moved in your favor, no harm, no foul. Thank you, market. You did exactly what I thought you were going to do. So I'm saying this just becomes bad PTP, and it's never a trade that we want to add on. So add this trade, add the stall, right? So I'd add more here, get my break even here. And then if I felt like this was the nadar, then I would get out right here. Right.
Steve, do you remember how to get the break-even indicator back on? Because I
Okay, so we start talking about the break-even indicator, and we're actually, so right now it's at the 41
Well,
minute.
how dismissive was that? I just went through
I
a
know,
whole
right?
monologue. Like, yeah, thanks. Break even line.
So anyway, how do I get the break-even line? Now, what happens is we go all the way to the, and I'm not going to take us there, but we go all the way to the 50-minute and 20-second mark, where it finally dawns on me when he comes back to it again. right here. And I actually draw it, it clicks and I draw on my chart, because what goes on for the rest of the morning is price comes up to here, the class ends, I add up here, and then I get out with profit here. But this trade was so influential on break-even line and early, mid, and late game, I never realized it. So what the comment I make right about here at the 50 and the 20-second mark is I basically redraw what he did, and I say, oh, you wait for it to break and then come back, and that's when you add. And once we spent the rest of the time confirming that this trade should have never happened, that completely changes the entire position size. And so from that moment on, an account like this one, where we have very limited bullets, and we have to be stringent with our early, mid, and late game, this trade cannot happen. And so we can see this example here where price comes here, that this is when we add, if we were going to add a trade, not here on the way down. And so we needed price to break, come back up, and then add. So for me, that happened on the 27th. So the rest of that week, last week, and this week, that has helped immensely with my success of early, mid, and late game. So that was point number 1 for me. Does anyone have any questions on that?
I do have a question though. Yeah,
What's up, buddy?
And this is a good question for probably everybody. When you have those aha moments, what do you do? What have you done? Because you obviously said that it's helped you in, the rest of the week and last week. What do you do to remind yourself that this is now needs to be part of my trading? Does that make sense? Because you can have that aha moment and then the next day you forget. Oh yeah, that's right. So how do you incorporate that into something that you're always doing? Right?
Yeah, it's almost like there's some sort of a plan that you could trade by. Okay, so number 3 is going to be.
Are you ignoring me?
I am, because I'm getting to it. I'm getting to it.
All right.
The answer is, in this discussion, as we continued through our talk, at the end of this, well, let me pull back 1 second. Probably back here somewhere in the class, you were asking me about my early, mid, and late game. And I fumbled around with saying, 4 to 6 or 6 to 8 or 8 to 10 in my early, when that means about, 10 to 20 in my mid, and the rest for my late. Well, then way over here, all of a sudden, we look at price, and price only went 2 price cycles, 1 up, 1 down, and then it went 2 price cycles, and I was already in mid game, not realizing it. So David asked again, like, hey, so again, what's your early, mid, and late? Because all of a sudden I was in mid game when the market was still in early game. And so I quickly learned that early, mid, and late game, you have to define that. And
because you're at the end of your early game.
Okay. So you have to define that. And for me, how I defined it was going back to my trading plan. And so the homework for the next day was updating my trading plan. And I didn't realize how soft and willy-nilly I had let my trading plan in a account that has limited bullets just go willy-nilly. And so I went back to the trading plan, and I redefined, and this is what I started out with, redefining my early game, thinking that was correct, or that would suffice for me.
Hey, I just gotta interject here. I gave him this homework to do after day 1, and he did it. He did it.
Huzzah!
But he did give you props, Josh, because he said that he learned that from you, I think, from back in the day, or he used this template that you had or something like that.
Yeah, that's the one that we came up with. But if you don't have a plan, You're not gonna win this game, guys. So good
Yeah.
work, Pete.
Well, and even this, so I went back and this is what I set up for my trading plan. And I said, 1 to 2 price cycles against me in early game, 3 price cycles over 3. I actually had this adjusted a little bit closer. And so the reason I have point number 2 is early, mid, and late game is my recommendation is that the early game is from 0 to 2 price cycles. That should be your entire, and again, this is my recommendation. So I'm going to speak as if this is gospel truth. The early game should be 0 to 2 price cycles. The mid game should be the extension of the 3 price cycles. And the late game should be that 20% market where it's already expanded the 3, and now we're into 4, 5, and beyond. And in this location, you're doing something completely different than in here and in here. So first of all, in here, for early, mid, and late game, what became solidified for me in this small account is, first of all, PTP, proper trade placement, should, let's say that there's no trades here. PTP tells me that I have to wait for a price cycle or a pullback before I add the first position. So you're already adding at a pullback. So now you're already at least half a price cycle, a quote unquote against you. You might even be 1 price cycle against you. This is 1 price cycle. If I start here, now my early game shouldn't just be between 1 and 2 price cycles here. It's actually, in real time, it's actually going, if it goes 2 more price cycles, this entire position should be my early game. But how I had it backwards was, this was my early and this was my mid. So when a currency like the euro goes 30 pips, I was already in late game redlining at -1%. And so through the class and through looking at that trading plan, it became apparent that, especially with limited bullets, but even without limited bullets, in gold, or if you're trading the UJ, whatever you're trading, if you're following that you stay in early game after the pullback, you now have so much room. And then early game, number 3 would be, your ideal situation is you wait for the pullback and you get in and it goes in your favor, it breaks, you add again, and then you secure. That is the ideal day. And you keep doing that until it knocks you out, and then you wash, rinse, repeat, or you hit goal and then you're done for the day, or you wash, rinse, and repeat. This should be the target for all 3 and 50 traders. And when the market goes 2 price cycles against you, 2 to 3 price cycles against you, that's when you begin your mid game. If you're sitting at 3 price cycles against you and you're in late game, you are way over leveraged, you're way too risky, and now you need the market to do you a solid and bail you out because your risk management was improper. That to me was my understanding of what I learned in that boot camp for number 2, early, mid, and late. So then taking that information and adding it to my trading plan and saying, okay, now I can look back at this trading plan, and I've even gone so conservative to say, all right, my early game is going to be 4 trades, and that's a 0.08 if I'm trading 0.02s. So that's a 0.08 total position. And you can start from there. So look how safe I would be in this position. Let's say that we're sitting here. This was trade number 1. And now I can look at this and say, well, where's the 50? Okay, well, this is trade number 2. So I have 1 and I have 2. pulls back, it keeps going. Well, now this is the end of my early game. Here's position 3 and position 4. Break even will be up in this zone. And if when it gives us a price cycle back to test, I'm in profit and I can get out if I want. I can recycle on the first if I want. I can hold if I want, because I'm only in early game. And so if it stalls and it breaks here, well, now we've just accomplished our prerogative for early game. We stayed in early game. We had good PTP. We just secured. And if the market wants to keep going, well, now we have all of our extra bullets at our disposal to add to the trade, to add on a pullback, to secure. So for me, this turning into early game was a huge game changer instead of this being mid and this being late.
Congratulations,
close-
Pete. You are no longer a trader. You are a position manager.
Da, 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 da. I had posted my trading plan in Discord, so I'll do that again after this. But essentially, it's just the template that you can use.
Pete,
You know. Yes, sir.
so what you're saying here about this, it's based on the fact that I don't know what is to the left here.
Right. Correct.
Say, well, if you came to a bounce point or not. So let's say you didn't know this part of it, and you came into the market and it was right here. From here, this is what you saw. How then you would have entered? Would you wait for a pullback here? Would you buy or sell here? Since you came into the market.
Yeah, and that's a great question. Here's what I'll answer to that is no matter, because when you come into the market, Cliffy and everybody else, we're not trading on the 1 minute. So you're going to go to your 5 or your 15 or your 1 hour or your 4 hour or whatever your prerogative is to get your bias, to find out your outside range, to find out all of that information. What I'm explaining here is it doesn't matter if it's gold or UJ, if it's super liquid or if it's super slow. When you find out your price cycles, as long as you're willing to stay in early game, whatever early game means. You know, Duke was giggling in the other hot seat class about his 500 trades. If Duke puts on a total of 500 between early, mid, and late, and he has 100 in early game, then good for Duke. If somebody else only has 100 bullets, or if they only have 50 bullets, and for them early is 4, good for them. And so you've got to figure out, and for me, my advice to the beginner trader here, and to potentially any trader, is you've got to adjust your early, mid, and late so your position size allows the market to go 20% without you losing 2%, 3%, 5%. There has been at least 3 or 4 days as I've traded the EU where I put a sell position on here. And when I say sell position, I put one position here, and then I put a sell stop or whatever it's called, and another one there, and I went to bed. And I woke up and price was up here. That's okay, because here to here is my mid game, and this distance was about 40 pips. What I know about the EU is it rarely goes over 40 or 50 pips. So I wasn't in freak out mode. Whereas a year ago, 2 years ago, 2 months ago, I would be at -4% if the EU went to 40 pips against me. So the entire shift is, if you stay in early game within up to the 2 price cycles against you, and you have proper PTP, Cliff, it doesn't matter if you want to start a buy position on this pullback to go up, or if you start a sell position here to go down. It doesn't matter, because the EU 80% of the time is only going to play around in a range or an expansion up to 3 price cycles. It'll pull back. And if you stay in early game and manage your position through mid game, you should be able to withstand the 20% markets of 40 and 50 and manage the position. And that's an entirely different discussion, but I'm talking about picking and popping, win while losing, hitting the red X on a broken KPI, all that stuff. But what I learned in that boot camp that stuck out to me after rewatching and looking at my notes and rewatching the videos is I needed to adjust my early game. And so that's what I'm presenting to you guys here. Cliff, did that answer your question?
To some degree, I was just asking you if, because what I'm looking at, I'm not thinking, I'm thinking you came into the market. You don't see this part. All you're seeing is this.
Sure. So in this example, this broke an outside range over here. So this is the 5 minute, and we were sitting right there. So it broke, we had got into a position, and I added on this pullback, which was the original teaching moment. And so then I just started to use this as an example, not a specific do this when this happens.
Okay. No, I understand what you said. Okay. So this relates to over here, this 5 minute.
Yeah. Yep. So that's why we were playing over here. And, eventually the market did whatever it wanted to do on, August 27th. The last thing I wanted to close with was Dave had asked me this question a couple of times. He'd asked Ed a couple of times, not a couple of times, but he asked Ed in his boot camp. And I never really had a good question, a good answer for the question. And the question was this: how has Darwin helped you become a better trader? And about a month or two back, Dave asked me that question on camera with one of the classes, and I kind of had an answer, but I wasn't 100% sure. But when he asked Ed that question in his boot camp, I was listening along, and for me, this is what dawned on me kind of out of the blue, and it was this: for the longest time, didn't matter what account we were in, whether it was apiary or whether it was the challenge accounts, all of those accounts, they closed us out at -5% loss a day. They would just straight close you. And obviously your balance was -5% of whatever it was. The challenge accounts, at -5% or -10%, you would lose and you'd have to start over and all of those different things. So you never had an opportunity to figure out how to manage your loss when the loss, completely leaves. And so Darwin was essentially the first company that gave us the long leash to say, go ahead and figure it out. We're not going to close you out. And so what had happened was, instead of me hitting the red X at -5% back in March, April, I could take a loss down to 8%, seeing that the market was coming up to a bounce points, and then it turned, and I was able to manage the position and work out of my trade. Now, was that, if you were to review that trading session, was it, what was the grade? Well, it was probably a D, but I was allowed to learn from the mistakes instead of just red X right here, and then the market turned 5 pips later, and now not only did I not learn from the situation or learn how to work out of it, I now lost my balance. So now I'm completely demoralized. My 5K a balance, 48,500 or whatever it is. So all of a sudden, Darwin, unbeknownst to us until later, Darwin was letting us learn how to manage our account. Again, whether it was the next day, 2 weeks later, you find yourself -10% down. And again, you're the one that has to figure out how to manage your trade. And so again, you could see how the market lives and breathes, and how the market would hit a certain KPI, maybe start rounding, run out of steam, and come back. And now it's up to you to figure out, how do I pick and pop? When should I recycle? When should I secure? When should I get out? Can I turn this -13% and ran out of margin? So now I'm like hoping and praying. What will happen to this? Is it going to go to -20%, or is it going to come back? And so now Darwin allowed us, by having time in the seat, it allowed us on whatever currency you were on, the EU, gold, silver, whatever, it allowed you to figure out how to work out of this 13%. And so from March all the way till now, I have been learning how to manage and work out of drawdowns, and then how to figure out, A, how did I get in that spot? And B, how do I prevent that next time? So back in May, I think a lot of us that were here, even on that call with Ignacio, back in May, we reviewed my account and everybody saw that my account went from 100K up to 147. And then I took a drawdown that I refused to get out on. And so that account went all the way down to about 98,000. So I don't know the exact drawdown, but this was a 60% drawdown. Some of my trades closed out like $20,000 worth. So then the balance was like, you know, it went from 147 to like 124, something like that. And then the market came back and I got out at 127. And then, so this happened in early May. We reviewed my stats in June, and Ignacio was like, hey guys, the VAR and your drawdown, your negative drawdown, these are so important in the world of Darwin. You have to manage your trades. And everyone that was on that call, and almost everyone that was from there, you know, in the next week or two, they all got that warning by trying to learn from what some of us OG traders started to trade back in January and February. Was you have to learn how to manage your trade. If you don't, then the consequence is 6 months. So while I learned huge learning tools, great advice from March to, let's just say, September here, I had a huge consequence in May that won't come off of my record until till December, because it was 6 months. Okay. So for me, what Darwin taught me, now obviously if you have your own account, then your own live money, then if you're in any account that doesn't automatically shut you off, you have to be your own account manager. But for many of us where we didn't have a live account, our only experience was losing 5% and getting shut off, and losing 10% and starting over, and never being able to work out of the balance, work out of the drawdown, still keep the balance, and then also have the consequence of that VAR go down. So now what that has done for me is I keep very close eye on the trade management, because I'm trying to fix the VAR from consequences from 6 months ago. I'll show you where I'm at with Darwin right now. It clearly did something in my trade psychology and in my trading plan and everything else. So here's where I'm at. Since January, since the start of the account, I've almost 11% return. Here was that May drawdown. And funny enough, this 10% is in Darwin world. The actual percent was like 60% drawdown. So here's the current quote. In August, I earned my first allocation, and already in September, I'm over it again. So I earned September allocation. When you look at my balance, today I passed over 212,000. I'm not over leveraging. I'm not over trading. I'm not too risky. I'm setting a goal, like the trading day goal. I'm using Anubis. I'm using the tools at my disposal. I'll get goal a couple times and the day's over. I'll get goal a couple times, the day's over. You know, it seems to be the more that your balance grows, the less risk that you have in the market. If you continue to stay in early game, especially as your account gets above 150 and onwards up to 200,000, making $500 a day and making $2,000 a day is incredibly realistic.
You might want to repeat that. That part about the bigger the account, the less risk you need to put in the market. You might want to repeat that.
Yeah. And logic tells us that to go from 150,000 to 100, to grow the account from 100 to 150, it takes time. It's hard. There's 3 steps forward, 4 steps back, all that kind of stuff. But once you've been able to grow your account to 150, to go from 150 to 200, you know, snap of the fingers, piece of cake. Now, obviously, you've learned stuff along the way to be able to do this if you're doing it the right way. If you're not throwing 10 lots on a trade and, you know, and crossing your fingers. If you're working your craft and you're understanding and learning from mistakes in this, then once you get to this plateau, this should happen 2 times as fast. I can put in less risk, like JBab just said. Back here, I was learning. Do I trade with a half a lot? Do I trade with 1 lot? Do I trade with 0.10? What do I trade with? By the time I got to here, I knew exactly what my sweet spot was, and I knew exactly what metrics I needed to hit. And now I trade with the same position size at the 100K that I do at the 200K, and I'm having more success than ever with less risk.
Can I just add something here real quick?
Yes, please. Yep.
Pete was in the same position that you guys might be in right now. And I got the privilege and honor to seeing Pete's evolution of his trading. Now, in all fairness, Pete was trading before him and I started to work closely together. Not sure how long or where his trading journey was, but when I picked him up from wherever he was at in his trading journey, he would have conversations to me like, I cannot make this consistently. I feel like I'm 2 steps, 1 step forward, 2 steps back. When we first started our journey together, it literally was trying to get him to take a $5,000 account to 50,000. And I kept telling him, if you can do that, if you can take a $5,000 account to 50,000, you figured out how to trade. You figured out how to manage your position, right? Fast forward about 1.5 years into him and our professional relationship where we were working together, he's figured that out. He's figured out how to grow and keep an account. I don't know, can't speak to the previous knowledge of what he had coming in to everything that we've been working together with him. But this ultimately is what I've been wanting for him, and it's what I want for all the hot seaters, really, but is for that to click to happen. And it is not something that you can just force, but it does happen. Click happens. And Pete's click is going to be different than your click. But Pete, through that journey of the 1.5 years that you and I have met, and people who are maybe at different phases of that journey, is there anything that you could lend to that piece of advice? Because there's many conversations that you and I had where you felt like, I'm just not getting it, right? I'm just hitting my head up against the wall. And I'm sure there's people here feeling the same way. And I just don't want them to look at you in the same way that I have gotten like, oh, that's just Pete. Do you know what I mean? Oh, that's just Pete because he's a good trader, so he can do that. I'm telling you, he put in the effort to get to where he's at. And is there anything along that journey that you would recommend to people who are sitting there where you were at maybe a year ago?
Yeah, I would say 2 things. One is I started with apiary in May of 21 and did the one.
Was that your first trading exposure to you personally in 21?
Yeah, exactly. Yeah.
Okay.
Yeah. It's something else I did 15 years ago, but it didn't matter. So May of 21, I went through their boot camp, the beeline, all that stuff. And all I did was learn, crash, and burn. LB and LCMB. I did that all the way. Literally, I will authentically tell you, I literally did learn, crash, and burn all the way until March of this year, March of 24. And I've got a couple of close friends in our Discord community that, we share our ups and downs and we ask for advice and we laugh at the stupidity of the market together. So they know that even from March until now, until September, I still am learning crashing and burning, but the crashing and burning is little speed bumps, not account killers. So time in the seat, kind of some things we've said before, there's no shortcut. I mentioned it to one of the guys and I said, I don't know when it did click, but it looks like the stats, it looks like my trading plan. It looks like for me, I have found a kind of a sweet spot. And now it's up to me to manage the position and continue to learn and manage the crashing and the burning, because those things will come. So that's kind of number one is don't, if we all know that Dave is a magna cum laude, he is a rock star. And if you happen to think that I'm on his pedestal, then you're way wrong. I'm literally the same as every other trader in here. We are all trying to learn, and we're crashing and burning along the way. And eventually we will come out the other side with accounts that you're able to build off of. So I would say this, my final thought would be 100 days. Essentially from April 1st.
That's 100 trading days.
100 trading days, yes. From April 1st till now was essentially, literally right now is like 100 and maybe 14 days, trading days. But right around 100 days, I think it took 102 for me to double my account. 100 trading days is the difference between you now and you at your goal line. For me, the goal line was allocation. For me, the goal line was confidence and understanding a trading plan, all of those types of things. So the best thing I can say is 100 days, slow and steady. And if you ever hear Duke say, 0.25% doesn't move the needle for me, you should slap him.
And we'll end there.
If I'm leading a trade fund, 0.25% or 0.1%, if you make 0.1 a day and you do that consistently for 100 days, and if you do 100 trading days, if you do this 0.1 a day consistently for 1 year, you can walk into any pile of money and become a millionaire, because 0.10 is 20% a year. And you will outperform any hedge fund. You will outperform the S&P. You will have, Darwin will love you. So if you think that 0.10 a day doesn't move the needle for you, then all you need to do is reset and think to yourself, this is the long game. We're not here to get rich on 6 trades. We're not here to hit 1% a day. We're here to manage our trades, and we're here for the long game of 100 trading days.
So that takes me back to a conversation or something that you said, in one of the previous presentations that you've done before that has stuck with me.
Slap Duke? I don't know if I've recommended slapping Duke yet.
So we have a smack of Brandon and we have slap a Duke. No, but you said this and it was a few months ago, and your psychology transition, right? The psychology transition in your trading. And you said this a few months ago, and I'm distinctly remembering from what you said, I was thinking, well, he's on his way, right? And the psychology is that you kept saying at that point, you were winning in the market, but every time that you won in the market, you still felt like it was lucky. Like you were being lucky that you received your goal, that you hit your goal, versus you were confident and taking that percentage from the market, whatever that percentage was. But I remember you saying that at some point in your progression, you were winning and you were consistently, but it was like, was it really me, or was it the market just being nice? Right. I feel like that conversation may have shifted psychologically from you, for now you don't feel like you're just getting lucky anymore. You have a system that's duplicatable, wash, rinse, repeat. How did you go from lucky to confident?
Sure. In the months of March and April, as I switched to gold and started to learn the volatility of that, I played around with position size, half a lot and 1 lot on a 100K account. In Darwin, you run out of bullets pretty quick. I think I kept telling you guys, like I could only put on 8 lots before you run out of that negative 100% margin spot, and so you can't put on any more. So if you find here's a piece of evidence. You might be a lucky trader if you find yourself putting buy positions on and it's going down and you're negative 5% here and it luckily comes back and you get out at 0.25 and you won, or even if it comes back and you get out at 1%. I did this so many times. I would be at -5%, -8%, and then it would come back and I would get to 1%. And yeah, I won the day, but I knew that I had bad PTP. There was no reason for me to be buying here, all of those types of things. So by trial and error, this situation slowly dissipated. But it happened after I went down 5% and it came back, or I went down 10% and I hit the red X, or it went down 20%. And I'm like, why am I in buys? Like, I can remember the moment way back here 6 days ago when I put a buy on and I knew I shouldn't have, but I did it anyway. And now the market went 1,000 pips against me and I'm down 20%. And so finally, after I worked out of that position, finally, those types of situations stopped happening and they became less until now I can manage the position and all of those things in the trading plan tightened up. So over here, no trading plan. Over here, trading plan is tightened up. You're confident in it and it's wash, rinse, and repeat.
And
Did
you
that
did
answer the
give
question or not?
Absolutely, that answered the question. So I appreciate that. Plus, you also gave everybody your trading plan. And the thing is you're not giving somebody a strategy. You're not giving somebody an indicator. You're not telling somebody this is when you enter the market, this is when you exit the market, because everybody views the market differently. But a trading plan, everybody can adhere to. And I love that. I think the biggest takeaway for me would be what Pete has discovered is that early game is where your trading session for the day is won or lost. And we did that in our live session with Boone, where we stayed in early game as much as possible until we couldn't. But as soon as we weren't in early game, the objective was not to make money. It was to get back to early game. The objective is to get back to early game. I think Pete has discovered that secret is stay as long as he can and never leave.
Stay as long as you can.
When you're saying get back to early game, you mean if early game is say 5 trades for you, that's what you mean.
Yeah. Get back down to that 5 trade mark if the market forces you to go deeper into your mid and late game. Mid and late game is there for when the market forces you to go deeper. But Pete's, through this recapping, and correct me if I'm wrong, Pete, but I'm recapping what you said, Pete's aha moment was where he was starting his early game forced him to get mid and late game way sooner than the market was in. The market was still in early game and Pete was trading mid game, or the market was in mid game and Pete was in late game. And so he was starting earlier. And a lot of that can be masked by bad PTP, position size, getting in too soon, all that kind of stuff. And so that's why he put together a plan, right? A trading plan so that he stops making those same mistakes. Lee asked the question, just curious, what's your position size on a 100K account? Now, he does do that with gold, so take that with a grain of salt. Your position size is going to be different depending on the pair you're trading. But how would you answer that, Pete, for Lee?
Right. I would say a very calm, I think Eagle said in my board yet, I'm not bored with trading at all, but what's so incredible is if anyone's ever grabbed the calculator and did, okay, this account times 0.5% a day, times 20 trading days, times 12 months a year, holy cow. If anyone's ever done that, you'll realize that simply making $500 a day will put you in the top 1% earners in the United States. Earning $1,000 a day, imagine what that will do. It is so exciting to see when I'm making 0.4% goal, that's now about $800 in a $200,000 account. Getting goal twice puts you over $1,000, and that's a great day. That puts a smile on your face. $500 puts a smile on your face. The class I did, I can't remember when it was. I explained my position sizes and how I set things up, but I'll say it again here. In gold, which it's extremely more volatile, Darwin cuts down your margin availability. I start with a 0.3 position size, And Khalid really helped me through this. Here's what it was. Khalid and I did a class on how to use the bots and how to back test. And so through back testing, I played around with a quarter size, 0.3, 0.4, 0.5, all the way up to one lot. And what Khalid and I found was, for my strategy, for my comfort level, for my trade management, this is my starting spot. In this example, if price does this and I start here in a buy, my first position is 0.3, and I'm just going to round this off. But my next position will be here at 0.6, which is essentially the dollar cost averaging, which will move our break-even line here, and which is essentially our win while losing and our 3 and 50 method and all of that. So then down here, it'll go to, let's just say 0.9. So my total positions are, what do we got? 1.8 lot. And so now goal is here. And when I'm sitting here, if this is overnight, I set my goal at 0.40. And so price will come back and knock me out. But if I'm at the computer, I change my goal to be, I just go into the properties and change it to be like 1% or 2%, somewhere like right here. This might be 1%, which is under this action point. And so price will come here, I'll secure it, it'll come here, and I will secure and it'll get me out. 1%, somewhere between 1 and 0.4%. And it goes back to, I literally just earned $800 to $1,600 in a position size that was only 1.8 lots. This was 100% early game. And in my $200,000 account, 1.8 lots, that to me is absolutely great trade management, managing a position. And if it goes again, even further, then we're doing another dollar cost averaging, and we're moving a break-even line, and we're managing positions and all of those types of things. But in gold, this distance from here to here is probably 200 pips. And with gold having a price cycle of 50 to 80, what does that tell us about the market? It's gone at least 2 price cycles. So I stayed within my trading plan. If it goes another 2 price cycles, then I'm entering the early part of my mid game, but I'm still sitting between 1.8 to maybe 4 total lots. So that is my entire trade strategy in a nutshell with gold. Does it work every time? Do I never take a loss? Do I red X at 5%? Do I red X at 10%? All of those things you've got to decide for yourself. Now, if I have a 200K account and this is my personal funds or these are my investor funds, am I starting at 0.30? No, I'm not. Because I will, on a gold move of 500 pips against me, I will be down between 1 and 2%. And in real world non-Darwin money, I don't want to be down 1 to 2%. So I could cut this thing in half, reduce my risk even more, and still make everybody happy.
You will get more investors with that kind of thinking than any daily return, weekly return. The returns are not what they look for primarily. They look for how much risk do you put on the table for what kind of return, and does that fit them? The less money you put on the table to make money, the higher probability you'll get an investor.
So there you go. That was everything that I learned, and I had an extra week to really think through and maturate on how I wanted to share that with the group. But so great job. Thanks, Dave. Thanks for that boot camp.
I would challenge you that honestly, your next evolution in your trading isn't going to come from you. It's going to come from teaching. That's your next evolution, really. And if you don't want to teach, then it's going to come from you doing more boot camps and having somebody else look at it, because you're not going to be able to progress your personal thing any further than what you can go unless you have somebody that's helping you along the way. That's my personal belief, right? Once you get to a level of like, I feel like I don't know what I don't know type situation, you're not going to be able to progress without help. right? And that help could come in a myriad of different ways by teaching and people asking you questions and say, why did you do this? And then you have to come up with an answer for that. Or by saying, hey, Dave, help me to see what I don't see. And that was huge for Pete. That's why I'm doing the boot camps and I love them, is because every single boot camp we have an aha moment with that trader that's specific to them. So I love it. Anybody else have any last kind of questions before we turn the page here?
Thanks.
You guys, this is a very, 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 very valuable class. I would say to watch it back maybe a few times and to pick up the golden nuggets that were dropped for sure. And if you don't, I think for me, my biggest takeaway that I would share with everybody is have a trading plan. And if you want to start with Pete's and then massage it from there, he just gave it to you, right? All right. Thank you, Pete. I will drop this on YouTube for everybody, but if you want to watch it, it'll be up on the calendar in a couple hours, and then we'll kick it over to YouTube for everybody else. So thank you guys, and we will see you tomorrow morning.